15 minutes. That's how much of a head start someone had on the rest of the world. 15 minutes before Donald Trump typed a single word about Iran peace talks on Truth Social, 580 million moved in the oil market. Not slowly, not across the morning, in 1 minute. And whoever made those trades walked away with a fortune while ordinary investors were still asleep. To understand why this trade is so extraordinary, you need to understand the basics of how oil markets actually work. When you trade oil futures, you're not buying a physical barrel. You're placing a bet on where the price of oil is going to go. If you think prices are going to drop, you sell. If you think they're going up, you buy. These contracts are traded in enormous volumes by hedge funds, banks, and commodity traders around the clock. On a normal Monday morning at 6:49 a.m. New York time, oil futures trading is quiet. Pre-market hours are calm. The average number of contracts moving at that specific window over the 5 trading days before that Monday was roughly 700. It's a sleepy corner of the market before the business day really kicks off. On March 23, 2026, something different happened. At 6:49 a.m., approximately 6,200 Brent crude and West Texas Intermediate futures contracts changed hands in a single 60-second window, nearly 9 times the normal volume. The notional value of those contracts, $580 million, and that's just the oil side. Simultaneously, traders also bought approximately $1.5 billion in S&P 500 stock index futures, betting that equities were about to surge at the same moment oil was going to crash. There was no news. No Federal Reserve statement, no government announcement, no publicly available information of any kind that would rationally explain a move that size at that moment. The market had no reason to move until 15 minutes later when it did. At 7:04 a.m., Donald Trump posted on Truth Social that his administration had been engaged in what he described as productive conversations toward what he called a complete and total resolution with Iran. Oil prices immediately plunged. The Dow Jones Industrial Average surged more than 1,000 points. Whoever held those positions walked away with an enormous return. The exact profit hasn't been publicly confirmed, but the directional trade was precisely correct on both sides. Nobel Prize-winning economist Paul Krugman published a piece the following day titled "Treason in the Futures Markets." He argued that the timing strongly suggested foreknowledge. That remains an allegation, not a proven fact, but the data itself is not in dispute, and legal experts didn't mince words. Stephen Peepgrass, a partner specializing in futures trading at law firm Troutman Pepper Locke, told CBS News, "The massive spike in volume of trades right before that post is certainly enough to raise eyebrows, and I think to launch an investigation into what was behind that. To fully understand why Monday's trade looks less like a lucky read of the market and more like someone operating from a script nobody else had access to, you need to go back 48 hours before those contracts moved." On Saturday, Trump posted a direct threat. His message was stark. Unless Iran reopened the Strait of Hormuz within 48 hours, the United States would obliterate Iran's power plants. That kind of language doesn't just rattle financial markets. It rattles governments across an entire region, and it did. The same Sunday, Saudi Arabia, the United Arab Emirates, and Qatar privately contacted the White House and warned the administration to pull back on those energy infrastructure threats. Their concern wasn't ideological, it was practical and urgent. Iranian retaliation, they warned, would likely target Gulf energy facilities across the entire region, meaning Saudi oil infrastructure, UAE export terminals, and Qatari liquefied natural gas operations could all be in the crosshairs. The Gulf states were not pleading for Iran's sake. They were protecting their own economies. By Sunday evening, the posture inside the White House had shifted. The obliterate threat was quietly stepped back. The 48-hour ultimatum effectively expired without escalation. But none of that was public. There was no announcement, no press conference, no leak. The world went to sleep Sunday night believing the same aggressive posture from Saturday was still in place. Then at 6:49 a.m., Monday, $580 million moved. Then at 7:04 a.m., the world found out. The gap between when the decision changed and when the public learned about it is exactly the window in which those trades were placed. That gap is the story. While most of the attention focused on the Truth Social post, something equally significant happened on camera in the days surrounding it. Something that revealed more about the actual nature of this conflict than any official statement. CNN's Caitlin Collins asked Trump directly, "If a deal is reached with Iran, who controls the Strait of Hormuz?" What Trump said next was remarkable. He told her it would be opened very soon, that it could be jointly controlled, maybe me and the Ayatollah, and that there would be a very serious form of regime change. Read those words carefully. The Strait of Hormuz is not just a waterway. Roughly 20% of all globally traded oil passes through that narrow passage every single day. Approximately 17 million barrels flow through it daily. Whoever influences access to that channel influences the price of energy for the entire planet. When Trump described joint control with himself as one of the named parties, he wasn't being casual. He was describing what this conflict is structurally about. Meanwhile, Iran's foreign minister and senior officials publicly rejected Trump's characterization of productive talks. Iranian officials denied that meaningful negotiations were even underway. What reporting has pointed to is indirect contact, exploratory outreach through third-country channels involving Trump envoy Steve Witkoff, but nothing resembling the breakthrough Trump described on social media. Productive conversations toward a complete and total resolution, and Iranian officials publicly denying that productive talks exist, are not compatible statements. One of them reflects what actually happened that weekend. The other made oil prices move. Jared Kushner, Trump's son-in-law, runs a private equity firm called Affinity Partners. By the end of 2025, the firm was managing approximately $6.2 billion in assets, a 30% increase in a single year. Here's the critical detail. Roughly 99% of that capital comes from non-American investors. The single largest source is Saudi Arabia's public investment fund, which committed $2 billion to Affinity in 2021. That investment came with a backstory that demands scrutiny. The PIF's own investment committee evaluated the deal and recommended rejecting it, citing Kushner's lack of private equity experience and the unusually high fees being charged. Crown Prince Mohammed bin Salman personally overruled that committee. The sovereign wealth fund of Saudi Arabia invested $2 billion against the advice of its own financial analysts because the Crown Prince decided to. A March 2026 Democratic oversight letter estimated that Affinity collected more than $39 million in fees from the Saudi government in 2025 alone, and more than $110 million from Saudi Arabia since 2021. The UAE put in approximately $200 million directly. Additional capital flowed through a vehicle called Lunat, a nominally private Abu Dhabi firm backed by the same sovereign wealth infrastructure. And in March 2026, reporting from the New York Times revealed that Kushner and his team were already soliciting $5 billion or more in new capital, approaching the same Saudi PIF with first-look rights to any future fundraising, while simultaneously serving as an unofficial diplomatic advisor to the Trump administration on Middle East affairs. Senator Ron Wyden of Oregon, the ranking member of the Senate Finance Committee, stated it plainly. Kushner is literally on the payroll of the Saudi government while hijacking U.S. foreign policy. That's not a fringe view. It's the position of the ranking Democrat on the committee that oversees financial disclosures. When CBS's 60 Minutes asked Kushner about the conflict of interest concern in October 2025, his answer was revealing in its own right. He said, "What people call conflicts of interest, Steve and I call experience and trusted relationships. That reframing, describing financial entanglement with foreign governments as a professional credential, tells you a great deal about how this administration understands the relationship between private wealth and public power." The financial web doesn't end with Affinity Partners. It extends into the cryptocurrency world through a company called World Liberty Financial, which was founded with members of both the Trump and Witkoff families involved. Reporting on the company described a deal where a Tano-backed investment valued a 49% stake at approximately $500 million. According to documents described in that reporting, roughly half was paid up front, with about $187 million going to Trump-linked entities and at least $31 million slated for Witkoff-linked entities. The White House has said Steve Witkoff divested and recuses from matters affecting his financial interests, but the structure itself is notable. In May 2025, an Abu Dhabi-backed investment used World Liberty Financial's dollar-pegged stablecoin in a $2 billion Binance transaction. That transaction moved Gulf sovereign capital through a crypto vehicle tied to the families of the men conducting America's diplomacy with the Gulf. And here's the line that connects all of it back to the Strait of Hormuz. The government that put up those billions, the same sovereign wealth funds cutting deals with Affinity, investing in WLF, and committing capital to Gulf-adjacent vehicles, is the same government that warned the White House on Sunday not to escalate against Iran. The men delivering that advice to the president are on the payroll of the governments giving it. Go back to April 9th, 2025. At 9:37 that morning, Trump posted on Truth Social, "This is a great time to buy," signed DJT, which also happens to be the ticker for his own company, Trump Media and Technology Group. Less than 4 hours later, he announced a 90-day pause on nearly all of his Liberation Day tariffs. The S&P 500 gained 9.5%. The Dow climbed 7.9%. The Nasdaq surged 12.2%. The market recovered approximately $4 trillion in a single session. Richard Painter, who served as chief ethics lawyer for President George W. Bush, said Trump was sending a direct message. He can move markets with impunity. No investigation followed that trade either. Then there's Polymarket, a crypto-based prediction platform operating offshore, outside the reach of U.S. regulators. Prediction markets have drawn serious scrutiny over a series of unusually well-timed bets connected to specific geopolitical operations. Analytics firm Bubble Maps tracked the blockchain and confirmed winning positions placed hours before Israeli strikes in October 2024, hours before U.S. airstrikes on Iranian nuclear sites in June 2025, and hours before the joint February 28, 2026 attack that began the current conflict, 6 brand new accounts with no prior betting history on the platform won a combined $1.2 million by correctly timing that February attack. One account placed a large pro-strike wager shortly before the February 28th operation began. For context, these accounts had never bet on anything before. They opened, placed exactly the right bet at exactly the right time, and won. The Maduro case is arguably the starkest example. Days before U.S. forces seized Venezuelan President Nicolas Maduro in January 2026, a brand new Polymarket account won over $400,000 overnight by correctly betting on his capture before any news of the operation was public. An account with no history. One bet. Exactly right. It's not just the pattern itself. It's what happened when authorities looked at it. In Israel, 2 individuals, including a military reservist, were charged with using classified operational information to place bets on Polymarket during Israeli-Iranian operations in 2025, meaning law enforcement in another country found the evidence compelling enough to bring criminal charges based on the same kind of timing anomaly we're seeing in the United States. And here is where the conflict of interest reaches a genuinely different level. Donald Trump Jr. serves as a strategic advisor to Polymarket. He also serves as a strategic advisor to Kalshi, a competing prediction market. His association with both came through 1789 Capital, a venture firm he backed that invested in Polymarket. In July 2025, the Justice Department and CFTC quietly closed their existing probes into Polymarket. In September 2025, the CFTC approved Polymarket's return to the U.S. market after the company acquired a licensed exchange. In March 2026, CFTC Chairman Michael Selig publicly expressed hope that prediction markets would flourish under his leadership. Every regulatory decision that cleared the way for Polymarket's expansion in the United States financially benefits a company that the president's son advises. Meanwhile, Trump Media and Technology Group announced plans for its own prediction market platform called Truth Predict, built on cryptocurrency, competing in the same space the administration just deregulated. Senators Chris Murphy of Connecticut and Greg Casar of Texas introduced legislation in late March 2026 to ban prediction market contracts tied to government actions, military operations, and events where an individual can know or control the outcome in advance. That bill exists because the pattern became impossible to publicly ignore. Most people assume that a $580 million anomalous trade placed 15 minutes before a presidential announcement would trigger an automatic investigation. Under normal circumstances, the Securities and Exchange Commission and the Commodity Futures Trading Commission are precisely the agencies built to examine exactly this kind of market behavior. The SEC's enforcement posture changed under Chairman Paul Atkins. Staffing levels declined. Though notably, in March 2026, the agency announced a new accounting-focused enforcement unit, suggesting it retained some investigative capacity. But that unit was not announced in connection with oil futures. Senators Elizabeth Warren, Chuck Schumer, and Adam Schiff publicly called for an investigation into earlier tariff-related market anomalies. No public SEC action followed then. None has followed now. The CFTC, which specifically oversees futures markets, exactly the instrument used in the $580 million trade, is led by an appointee who publicly wants prediction markets to flourish. The same agency that would investigate this trade is the same agency that cleared Polymarket's return to the U.S. market while the president's son was advising the company. Senator Chris Murphy put the political dimension bluntly that Monday morning, posting publicly, "Who was it? Trump? A family member? A White House staffer? This is corruption, mind-blowing corruption." The White House called the concern baseless and irresponsible. But calling something baseless isn't the same as investigating it. And when the investigative machinery is either understaffed, philosophically opposed to intervention, or led by people whose regulatory decisions directly benefit the president's family, the absence of an investigation doesn't tell you the trade was legitimate. It tells you something different about how oversight in this particular moment actually works. Since March 12th, 35 C-17 heavy cargo aircraft have been tracked flying from U.S. military bases to Israel and Jordan, with 11 more in transit as of late March 2026. C-17s are the backbone of heavy military logistics. They move equipment, ammunition, and supplies at scale. 2,500 additional Marines have been ordered to the region. The USS Tripoli, an amphibious assault ship, is projected to reach positioning near the Strait of Hormuz within 1 to 2 weeks. A second amphibious carrier has been dispatched toward the Gulf. Former U.S. Navy veteran and intelligence analyst Malcolm Nance reviewed the publicly available flight tracking data and wrote, "There is a huge special operations deployment arriving in the Middle East. The seizure of Qeshm Island is almost 100% going ahead. Qeshm Island sits roughly 25 kilometers off Iran's coast in the Persian Gulf. It processes approximately 90% of Iran's oil exports. Seizing it doesn't destroy the Iranian state. It doesn't require a ground invasion. What it does is sever the regime's primary revenue stream. cutting off the income that funds Iran's military, its proxy networks, and its nuclear program. That is a very different kind of leverage than airstrikes, and it's the kind of leverage that makes Strait of Hormuz control, the thing Trump mentioned on camera, suddenly make complete strategic sense. Peace talks don't come with two amphibious assault carriers moving toward your primary oil export infrastructure. These two things cannot both be true simultaneously. Either the military movements are a bluff designed to force better negotiating terms, or the productive peace talks are the cover story for something else entirely. The $580 million trade, placed 15 minutes before the world found out, may well reflect which version is closer to the truth. The war that began on February 28, 2026, was sold to the American public on the threat of a nuclear weapon, a clear, morally legible justification that most people wouldn't argue with. What's harder to argue with when you trace the financial wiring is that the men running its diplomacy hold personal financial relationships worth hundreds of millions of dollars with the governments that most benefit from the outcome. Jared Kushner's firm collects tens of millions annually from Saudi Arabia, while Kushner advises on Middle East policy. Steve Witkoff's family entities reportedly receive tens of millions through a crypto vehicle backed by Abu Dhabi, while Witkoff conducts the Iran negotiations. The Trump family owns a significant stake in a stablecoin company that executed a $2 billion transaction with Gulf Sovereign Capital, while Trump posts about peace deals on Truth Social. And somewhere, in one account or across several, somebody placed $580 million on the right side of the trade 15 minutes before the rest of the world had any reason to. Rumors circulate online about who that trader might be. Some point inward to the White House, some point to undisclosed accounts connected to advisors. None of it has been confirmed, all of it should be investigated. The suspicious timing is documented fact. The broader questions remain unproven, but they are legitimate and they deserve a legitimate answer. What's remarkable isn't just the trade, it's what happens after it. The silence from regulators, the closed probes, the family members on the boards of the platforms where winning bets keep appearing, the legislation that only gets introduced because the pattern became too visible to ignore. The investigators who would normally pursue this working inside agencies whose enforcement posture was reshaped before any of this started. Marines are moving toward Qeshm Island. Two carriers are repositioning near the Strait. A man whose firm holds $6.2 billion, 99% from foreign governments, is conducting the diplomacy. A man whose family received tens of millions through Gulf crypto deals is the envoy. A man whose son advises the platform, where correctly timed geopolitical bets keep appearing, just happens to be the president. Peace talks and military deployments. Diplomacy and financial entanglement.